Well, we know from the meeting in Novograd a few weeks ago that 59 countries have formally applied, and we don't know which ones they are. We have some ideas. But one thing that did just get publicized on Monday, Bloomberg said that Turkey has formally asked to join BRICS and would be the first NATO member to request membership in the BRICS bloc. Think about that for a moment. And this is a very, very big deal. In fact, I was talking with someone who is a former high-ranking military advisor who I've talked with at length before, and I asked him, do you think Turkey stays in NATO? And he said, no, I don't think so. And now this is supposition, but they asked to join the European Union and they were rejected. And so I think they have doubled down. They're the largest purchaser of gold this year. And in our previous interviews, we've talked about the role of gold in the BRICS, which is the only other tier one asset in the world, and the possibility, at least agreed in principle, of the new unit settlement currency, which will be 40% gold backed, held within the borders of the countries that possess the gold to make the new unit token. And so you see Turkey being the largest producer or the largest accumulator of gold this year, formally requesting admittance into BRICS as a NATO member. Sides are being drawn. Sides are being chosen. And, you got guys like Jim Willey, who admittingly, he will say things that I've never heard before. And sometimes they sound outlandish and very often they come true. So I'm not disparaging his sources, but a lot of the sources that he gets, I don't know where he gets some of the info he gets, but some of it's pretty amazing. And he's said things before, like Japan and countries like Australia have interests in joining the BRICS. Now, we don't know that to be official. Haven't heard about it, but there will come a point, then again, where sides must be chosen, and this is one of them, a NATO alliance member, a Western-friendly member. And you just saw it, two naval sailors were just, almost abducted in broad daylight in Turkey yesterday. It's a country that is not maybe as Western-friendly as we would like to think, yet they are part of NATO. And for them to choose sides and openly apply to BRICS while massively accumulating gold will tell you don't have to be a rocket scientist. They are dropping the crumbs at your feet. I think they are tired of the West. When the European Union turned them down, they would rather stand on their own 2 feet and join a union like the BRICS that is not only cooperative rather than coercive, but that provides them opportunities not found in the Western alliances. So it's a big deal. It's a very big deal. We don't know if they've been approved or anything along those lines, just that they have formally applied. And that is somewhat of the first time we've seen a Western ally, a NATO member, throw their hat in the ring, and where that goes and who it incentivizes to also be courageous enough to throw their hat into the ring. From here, only time will tell. But as the Chinese curse goes, we are certainly living in interesting times, and this is one of the more interesting developments we've seen BRICS related in quite some time. Then again, our leaders have done more to destroy our image than any external foe could have ever done in the last several years, and it is a stunning turn of events. But much like everything that is too stupid to be stupid, it was incentivized by our actions and by our policy decisions and by our monetary decisions and all of the things that are incentivizing these countries to choose sides, to back away from the West. Here again, it's sad, but much like many of the things that are a shock to the system, this is no different.
In the current global financial landscape, one of the most significant, yet often overlooked trends is the increasing importance of gold and silver. The massive accumulation of precious metals by central banks, especially in the East, and the shifting dynamics of global alliances are signals that the world as we know it is changing. Today, we're going to dive into the heart of these shifts with a focus on the BRICS nations, gold-backed currencies, and the role of silver in high-tech and military industries. The context for this discussion comes from Andy Schectman's observations on the topic, and we'll explore the implications for both individual investors and global economies. One of the most intriguing developments in recent weeks is Turkey's formal application to join the BRICS coalition. To give some context, BRICS consists of Brazil, Russia, India, China, and South Africa. And this economic alliance is gaining momentum as more countries express interest in joining. The BRICS countries are positioning themselves to challenge the dominance of Western financial systems and potentially the US dollar as the world's reserve currency. The fact that Turkey, a NATO member, is seeking to align itself with BRICS is a huge deal. It signals a significant geopolitical shift, with Turkey looking east for opportunities rather than maintaining its historically Western-oriented alliances. Turkey has been rejected from the European Union and has grown weary of Western hegemony, leading to its search for alternatives like the BRICS alliance, which offers cooperation rather than coercion. Moreover, Turkey's increasing accumulation of gold is no coincidence. In 2023, Turkey became the largest purchaser of gold, a strategic move that aligns with the broader BRICS objective of reducing reliance on the US dollar and strengthening their financial security with gold-backed reserves. As Andy Schectman points out, gold is a Tier 1 asset, a crucial foundation for any monetary system that seeks to maintain value independent of fiat currencies. Turkey's actions underscore the fact that nations are preparing for a future where gold plays a central role in the global economy. So why are these countries so focused on accumulating gold? The answer lies in the possibility of the BRICS nations developing a new settlement currency that is partially backed by gold. In recent discussions, there have been reports of a new BRICS currency that could be 40% gold-backed. This move would be a game-changer in the global financial system, providing a currency that has intrinsic value and is not tied to the fluctuations of fiat currencies like the US dollar. Central banks across the BRICS nations and beyond are repatriating their gold and increasing their reserves, preparing for what seems to be an inevitable shift toward a new monetary system. This would give countries that hold large amounts of gold a significant advantage in terms of global leverage. As the historical transcripts from the 1974 meeting between Kissinger and Enders highlight, gold revaluation gives countries with substantial gold holdings considerable power on the world stage. The BRICS nations, by accumulating gold, are positioning themselves to lead in this new financial order. So what does all of this mean for individual investors? The answer is simple. Now is the time to start accumulating gold and silver. The global financial system is shifting, and those who are holding tangible assets will be the ones who come out on top. The actions of central banks, governments, and large institutions should serve as a wake-up call. If these entities are preparing for a future where gold and silver play a central role, shouldn't you be doing the same? There's a common saying in the investment world: if you don't hold it, you don't own it. This is especially true when it comes to precious metals. In a world where fiat currencies are losing value and financial systems are becoming increasingly unstable, having physical gold and silver in your possession is the best way to protect your wealth. Furthermore, as the suppression of the silver market begins to unravel, we could see a significant increase in the price of silver. For those looking to invest in precious metals, silver represents a unique opportunity. Its industrial uses, coupled with its role as a store of value, make it a valuable asset that is currently undervalued.
2024 will be another deficit, and they imagine 215 million ounce shortfall, second largest in more than 20 years, fourth year in a row of a structural deficit. Of course, the supply demand numbers do not put in military usage, and that's a big deal for me when we go back to the congressional hearings, Senate hearings, subcommittee hearings in the 40s that I've talked about, I've shown you, that talk about needing 200 million ounces of silver per year in the 40s. Well, we've talked at length about the need for silver and high-tech weaponry, and those supply-demand numbers that the Silver Institute publishes, right or wrong, will tell you there's a 215 million ounce deficit on the horizon for this year, the fourth year in a row, but they don't mention anything about military. So my guess is those numbers are much, much higher, and this is why you have 8 brain-dead banks holding the price of silver down. All right, now going to India, it was just reported August 23rd that India's silver imports are on course to nearly double this year, and they're going to double to, the country has already bought 2,295 tons compared to only 673. This was in February alone. In February, 1 month, and they published these numbers months after. In 1 month, they bought 2,295 tons in February, and that's up from 637 tons in January. So you're talking a 260% increase month over month. That's massive amount of silver. Putting that in perspective, okay? That amount of silver that they bought in 1 month is 70 million ounces more in silver than the U.S. Mint made in silver eagle coins over the past 3 years combined. So you got India importing more silver in 1 month than the U.S. Mint has made in eagles in 3 years combined. Think about that for a moment. They are estimating that upwards ends of 7,000 tons will be imported this year. And I mean, last year it was 4,554 tons and 560 tons the year before. So 560 jumps up to 4,554, jumps up to 7,000. Their numbers are massive. And they've imported over 700 million ounces in the last few years. That's so much more than is on COMEX and LBMA combined for delivery. It's not even funny. And that's just what they tell us. And as I mentioned to you probably last week in an interview I did with Sean Kunkun from Dolly Varden, he says, look, Andy, China's flying all around Latin America and buying up all the doré and concentrate and shipping it back to China to refine it. How many people know that China is the second largest producer of silver in the world? And now buying concentrate and doré at up to twice what the West will pay for it, shipping it home and refining it, so it doesn't have the transparency or affect the price settlement the way that it would coming off of an exchange. You have these countries using the brain-dead Western suppression against us, draining the exchanges, making massive deliveries across the globe, and now even disintermediating the whole system and going right to the miners and buying their doré. So it's a big deal. I mean, I don't know how much bigger of a deal than I can explain it than to say these countries are every bit as sophisticated or more so than the West. And in fact, they know what we're doing, and we've documented that on all sorts of things that they've said, like the head of the Shanghai Exchange in 2015 saying, when China is allowed to speak at the gold table, the real price will be observed. Or the BRICS Grain Exchange saying we produce more grain than the West, but we can't control the price. It's done on COMEX. That will change now with the BRICS Grain Exchange. They know what we're doing to the world's commodities. They know we're suppressing them. So instead of raising a fuss about it, they're just draining it and buying it everywhere and anywhere they can, even in unrefined form.
At the heart of the BRICS strategy is gold. As Schectman notes, gold is one of the few Tier 1 assets recognized globally, and central banks are increasingly repatriating their gold reserves. This is not a coincidence, but part of a larger plan to create a new currency backed by gold. A gold-backed BRICS currency would challenge the dominance of the US dollar and could potentially reset the global financial order. For years, the Western financial system has been built on fiat currency, money that is not backed by any physical commodity like gold or silver. However, the BRICS nations recognize the fragility of this system. By accumulating gold, they are positioning themselves for a future where the value of money is once again tied to a physical asset with intrinsic value. Schectman points out that since 1974, there has been a concerted effort by Western governments to demonetize gold and push it out of the financial system. However, the BRICS nations are reversing this trend. Countries like Russia, China, and India are not only accumulating vast amounts of gold, but they are also working to repatriate gold from foreign vaults back to their own countries. This repatriation is a strategic move to ensure that these nations have control over their gold reserves in the event of a global financial crisis. While gold often steals the spotlight, silver plays a crucial, albeit quieter role in the global financial landscape. Silver has long been undervalued, but its importance in industrial applications, including electronics, solar panels, and military technology, makes it a key asset in the future of global trade and technology. Schectman highlights that silver is essential for high-tech weaponry, particularly in military applications. Historical data from congressional hearings in the 1940s shows that the U.S. military required 200 million ounces of silver annually for its operations. Given the technological advancements in modern warfare, it's likely that the demand for silver in military applications has only increased. The Silver Institute projects a 215 million ounce shortfall in the silver market for 2024. However, this figure does not account for the military's demand for silver, meaning the actual shortfall could be even higher. The consistent deficit in silver production, coupled with rising demand from technology and defense industries, makes silver a critical asset for future growth. Countries like India are acutely aware of silver's importance and are acting accordingly. In February 2023 alone, India imported 2,295 tons of silver, a staggering 260% increase compared to the previous month. To put that in perspective, the amount of silver India imported in 1 month exceeds the total amount of silver eagle coins produced by the US Mint over the past 3 years combined. This aggressive accumulation of silver demonstrates that countries are preparing for a future where silver will be a key component in both technology and monetary systems. Schectman frequently discusses the manipulation of the silver market by Western financial institutions. For years, banks have held down the price of silver through complex financial instruments like derivatives. This has allowed countries like China and India to accumulate massive amounts of silver at artificially low prices. However, this suppression cannot last forever. As the demand for silver continues to outpace supply, the market will eventually correct itself, leading to a significant increase in the price of silver. When this happens, countries and investors who have accumulated silver at these suppressed prices will see significant gains. One of the key points Schectman makes is that Eastern nations like China and India are using the West's suppression of the silver market to their advantage. By accumulating physical silver and refining it domestically, these nations are reducing their dependence on Western financial systems and ensuring that they have the resources needed for future growth. For individual investors, the actions of these countries should serve as a wake-up call. If central banks and governments are aggressively accumulating gold and silver, it's a clear signal that these assets will play a central role in the future of global finance. The idea that gold and silver are barbarous relics of a bygone era is being proven wrong by the very institutions that control the global financial system. Investors should take note of the geopolitical shifts and the strategic accumulation of precious metals by the BRICS nations. As Schectman frequently says, if you don't hold it, you don't own it. Physical ownership of gold and silver is the best way to protect your wealth in a world where fiat currencies are losing value and financial systems are becoming increasingly unstable. For those looking to hedge against inflation and protect their assets, gold and silver represent a safe haven. The actions of central banks and governments around the world show that these metals are not just a store of value, but also a strategic asset in the global economic power struggle. As we look to the future, it's clear that gold and silver will play a central role in the global financial system. The BRICS nations are laying the groundwork for a new economic order, one that is based on tangible assets rather than fiat currencies. The US dollar's dominance is being challenged, and countries like China, Russia, and India are positioning themselves to lead in this new financial landscape. For individual investors, this presents an incredible opportunity. By accumulating gold and silver now, you can protect your wealth and position yourself for the coming changes. The key is to act before it's too late. As central banks and governments continue to prepare for the future, so too should you. The days of fiat currencies as the cornerstone of the global financial system may be numbered. The actions of the BRICS nations, Turkey's shift toward BRICS, and the increasing accumulation of gold and silver all point to a future where these precious metals will once again serve as the foundation of the global economy. In conclusion, the current trends in the accumulation of gold and silver by nations like Turkey, India, and China should not be ignored. The shift away from fiat currencies and the strategic use of precious metals as a hedge against economic instability is a clear signal that the global financial system is on the verge of a major transformation. Investors who act now to accumulate gold and silver will be well positioned to thrive in this new economic landscape.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.